Hello, and welcome to Virtual Investor Conferences. My name is Cecilia, and on behalf of OTC Markets, as well as our co-host, Alpha Transform Holdings and Blockchain Wire, we're very pleased you have joined us for our next live presentation from BitMine Immersion Technologies. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Jonathan Bates, Chairman and CEO of BitMine Immersion Technologies, which trades on the OTCQX Best Market under the symbol BMNR. Welcome, Jonathan.
Thank you very much. Appreciate it. And thanks everyone for taking the time today to hear about our company. And, I know it's been a long day of blockchain. The building blocks of the Bitcoin network are mining, of course. And we have a pretty unique process that we specialize in. And so I'm looking forward to discussing that and just Bitcoin in general. So with that, I will get us started. Here we go. So Bitcoin mining, just simply the process of contributing computing power to the Bitcoin network in order to validate transactions. This is maybe kind of remedial for some of the folks out there, so I apologize. But for those who don't know, it's a proof of work protocol. These computers commit a lot of computing power in order to validate these transactions. Most of us, really all of us, are part of pools, and so the mining computers get rewarded with their share of the block rewards. The computing power gets paid out to your wallet once a day, generally, and that's how you get paid. And your costs are your costs, and your rewards are Bitcoin, and more or less your production generally is below the spot price, and you're obtaining them. You're collecting Bitcoin that comes into your wallet every day below the spot price. Is how that works. All right, next one. Our difference. So we're a little bit different. A lot of the largest miners have, are working on and have the privilege of having a lot of scale, and we are growing. But our brand identity focuses on technology and cutting edge mining rather than just the raw exahash of power. We want to drive high output per machine. And so we just started ordering some of the newest generation machines. Immersion cooling is really a process by which you can, it's a superior cooling process. So therefore, you can obtain more yield, derive more Bitcoin out of the same computer. And so that's the idea, because the cooling is so much better and more efficient. It allows you to generate a little extra yield off the computers. And it also has an added benefit because they're running underneath within a dielectric fluid, that the machines, they're not exposed to corrosive elements, dust, dirt. Some of these machines, if you look at some that have been running in air for long periods of time, there's dust and bugs, and you wouldn't even believe some of the stuff that's caked on. It requires pretty heavy duty cleaning, but that doesn't happen in immersion. They're removed from the elements, and generally that adds about, call it 30% additional life to the computer. So it's an elegant environment for the computers themselves as well. Talk about this a little bit. You have a little bit of a picture there representing it, but you fully immerse the machines in a fluid, and it's a closed loop. And the way this works is the warmer fluid rises to the top. It gets pumped out. It gets sent through a dry cooler. Generally, in our case, they're above the actual containers themselves. Gets cooled back down to the ambient air temperature, then cycled back in to the bottom of the container. So it's a continuous process of cycling in and out, what's essentially attempting to be an ambient air as well. So That's ideally that's the best temperature for the chips is ambient air temperature. It allows them to run the most efficiently, and so it also the overclocking I mentioned before, it increases the miner production and efficiency. You can usually get about call it 15 or 20% more um, Bitcoin off the same computer if you're properly cooling it and overclocking it. And as mentioned before, it also protects the machines and preserves machine life better. Right now, where are our locations? We have really three spots. Pecos, Texas is, we rolled that one out. It's a 5.5 megawatt site. We have a joint venture with one of our investors actually on our cap table. And we also have some company owned assets there. Our total representation is about 2.5 megawatts. It could be grown to up to 10 megawatts. Um, we've got a kind of our flagship site in Trinidad, actually, that it's about 1.6 megawatts in total. It's two containers, but it has the ability to be expanded, and that we're excited about that because the energy is fairly cheap there, and we have kind of a unique deal. So we're actually looking forward to the possibility of expanding that site. And then in Kentucky, we actually have 3.4 megawatts that we deployed in kind of a quick answer situation that was presented to us to put some machines to work there. We were offered the machines, the hosting, the financing, all in one big package. And we had to answer pretty quickly. And at that time, Bitcoin was like 27,000. It wasn't quite, it wasn't as easy a decision as it might have otherwise been. So I'm glad we did it. It worked out great. Um, and then you get a little picture of the with the inside and the outside of some of these containers, what it looks like. And those are General Electric transformers there as well. Um, all right. So how do we make money and what are our revenue streams? Um, Self mining is mainly what we do at this point. There was a time where we were looking more to be hosting, which I'll talk about in a minute. But self mining is you're running your own computers at your own data centers or at other people's data centers, and the daily payouts go into your wallet, and your costs are your costs. And if you have to sell a lot of the Bitcoin to pay for your existing expenses, it pains me every time. But I do. Um, and then so like self mining is probably the highest upside potential. It's expensive, but it also gives you the most upside. We're also reaching a point in the cycle where, believe it or not, typically 6 months post halving is when you tend to see the real rally begin. And this time I think because of the ETFs, we saw an all-time high prior to the halving. It's the first time that's ever happened. But I still think we're in that cycle where the post halving 3 months, 6 months into the end of the following year. It's what I like to call peak mania. That's where you tend to get the most solid run. So hosting revenue is safer. Then you would tend to put your other folks' machines in your data centers, and you'd either take a share of their profits, or they would pay you a fee for parking the machines there. And generally, that's some kind of a markup on electricity, effectively, or a flat fee. And then machine resales. Simply selling machines to we have good resources to acquire machines, and so buying and selling a machinery is a pretty big business, especially during bull runs. So we're looking forward to maybe expanding that. We also have quite a few transformers as well, and being in the transformer business is also pretty good. The bid offer spreads are pretty big on those as well, but we're looking forward to maybe various types of machines, not just basic miners, but maybe transformers too. Um, so I'm going to go to the next slide. Public market landscape. This is more of a really basic depiction. It's a little bit old, but looking at miner market caps and the average in the top five, and we aspire to be like these guys. I mean, one of the biggest companies is CleanSpark, and they started on the OTC markets, and they made it to NASDAQ, and they have a $4 billion market cap. And we'd love to follow in their shoes. In fact, you'll see in a minute, their former CFO, Lori Love, is on our board of directors. But a lot of the larger companies are awarded with a pretty nice revenue multiple. 11.62 times. Generally there's 8 to 20 times revenue. Pretty normal, depending on the day and the price and whatever. The prices are really volatile, but the point is, it's a very the sector is rewarded with some pretty nice multiples. Um, so where are we? We're a lot smaller, obviously. I had projected revenue there, so I wouldn't say that's really necessarily projected. But if you just extrapolate what we're doing right now as of the most recent quarter and don't have any growth, um, that's kind of what we're tracking at as we speak. So we have some interesting things in the works, and I hope we do. I'd like to say that we should be able to have some growth. So anyway, that to me is you look at our revenue multiple compared to the bigger companies. We're we're smaller. We have the ability to grow a top line. When you're talking about a small revenue amount like this, it's just a lot easier for us to go from 4 or 5 million to 25 million than it is for a company doing 100 million to go to even 200 million. It just takes hundreds of thousands of new machines, and you got to find locations. You got to build entire sites. We have the ability to grow our revenue at a lot higher clip than these other guys, and we're already trading at a discount to these other companies. Um, Not to mention that we're also, as mentioned in the third bullet, we're pursuing an uplisting, possibly Nasdaq or NYSE. So there's a number of things that could unlock extra value into our stock versus maybe some of the others. There's only a small amount of debt. It's to Innovative Digital Investors, which is the fund that initially sponsored this project. It's a fund that I run. I'm the control person, so I've got kind of keys to the debt itself. This Innovative is also the largest shareholder in addition to having this debt, so it's friendly all the way around. We did a recent round of funding. Basically, it was actually 2 years ago at $1.25. The $1.25 round included a $2 and a $4 warrant. So the stock price is at a discount to where that stock was sold. But so we think we've had a lot more progress since then in the last 2 years. So we think it's a lot more of a value than it ever was at any other point. Talk about the halving. Yeah, we've all heard about the halving. It's certainly been in everyone's mind here in the Bitcoin mining. So, it was a painful but interesting day because, we had this runes protocol. I'll talk about that in a minute. It was a very new way of minting NFTs on the Bitcoin network, and you saw a lot of new activity, and it actually kept the transaction fees way higher than anyone expected. I'll talk about that in a minute. But in general, the halving has been the precursor to every big rally up till now. So the halving occurs and then it jumps later. So late 2017, late 2021, very similar to each other. And I personally think, this is just one guy's opinion, that 2025 will play out the way the other years did. I don't see why it wouldn't. But anyway, that's my take on that. You mentioned the transaction fees. I put this in here. So the halving occurred. Ordinals especially was already around, but then you look at the new coins and NFTs being created on the Bitcoin network. Altcoin season generally follows. Bitcoin has led the rallies. Altcoins have followed on after that. This is the first time as a miner that we have the ability to benefit from altcoins because people are bidding up transaction fees to obtain blocks on the network, and they're a lot higher than normal. And miners are paid the transaction fees, and normally the transaction fees are a small portion of block reward, but they've become a lot more important. I mean, you can see at one point it dropped in this chart. It was both. It was the hash price was about I think it's 100. I can't quite see it. Sorry. And it dropped down to 70 or something. You'd think it'd drop in half the immediate moment after, but it dropped for a very small period of time, and it actually went a lot higher. And that's because people were minting these runes. And you could look it up on Google or whatever, but it's a pretty interesting thing. They dropped back down since, kind of back to what we expected a little bit, but during altcoin season, this is a way for miners to benefit significantly, actually. The team, Jonathan Bates, that's me, former managing director, JP Morgan. Raymond Mao was a portfolio manager, large asset portfolios. Michael Maloney ran CoinMint, which is a 400 megawatt Bitcoin mine. He also teaches blockchain at Wharton. Ryan is the COO. Eric Nelson, the president, and Lori, I mentioned before, she's a director, but she was a former CFO of CleanSpark. Helps me out a lot. So with that, love to open it up to some questions here. And I get a little thing showing me the questions, so I'm going to go ahead and start to answer the questions. So can you discuss your revenue momentum from quarter to quarter? Yes, we had really the quarter ending 2/29 for us. It was it was only the 3-month period ending. It's kind of an odd date to end, but our fiscal quarters are a little bit offline with others. But during that fiscal quarter, it's the first quarter that we had all of our sites up and running. Before that, it was either only part of the time, or a little bit of one site was running and not the other. So it was the first kind of gauge that you were able to get, a full good quarter under our belt. So we did, I think it was 880,000 of revenue, and then we had about 76,000 of gains on the sale of Bitcoin in the quarter between the two. So this quarter for us will end on May 31st, and we think that I just think it's going to be good. So I won't put anything official out there, but I like it. So, all right, next. What are your thoughts on Bitcoin mining, prices this cycle? I would say that my biggest expectation or thought is, I definitely foresee possibly 125,000 on the low end, and maybe it depends on how much asset allocators are able to pile on this cycle, but it could be as high as $500,000. This is what we're kind of low end, high end expectations, and we're planning around that. We're prudent stewards of firm capital. We're not betting the farm or anything like that, but I'm just thinking that it's based on prior cycles. There's diminishing returns on each cycle. Like prior years, would 100x, 10x, 20x, whatever. Each new cycle with more mass adoption, it's harder to push the price that much higher on a percentage basis. But it does mean there's a lot of upside between this cycle and the next one if you look at it. Next, is your immersion cooling applicable to other compute heavy applications such as AI? Yes, it is. We've been testing with a company in Trinidad actually to run some of their computers in immersion, and so far so good. We're waiting for some other answers from them, but yeah, you can use them for that purpose, and it is equally as elegant an environment. I would love to have some AI hosting clients because Frankly, they pay a lot better. I mean, a Bitcoin mining client is a lot more price sensitive about the electricity, whereas a AI hosting client would pay significantly more. They just want to make sure their machines are in a good environment. So it is something we're pursuing. To the extent that we do hosting, I think that might be a good use of our space, of our capacity. All right. Next, is there a break even Bitcoin price for your hosting clients to be profitable? We only have like two hosting clients. It's only like 30 machines actually right now. It's not much, and they're like kind of friends more or less. But um, it it really depends on the machine right now, because the brand new generation machines are a lot more efficient. So it kind of it's a moving target that changes all the time. The difficulty rate, the price, the relative competition, the hash in the network itself, how many computers are plugged in. Um, there was I just happened to read an article that was handed to me it was produced by Cantor Fitzgerald about the cost of production post halving, and a lot of the largest miners were, 45 to 50,000 was their kind of their overall cost basis. I'm not exactly sure what actually their if they that included rent or it was just electricity or what, but we're kind of in that probably 50,000 area, if I had to just kind of spitball it. But that's so for the hosting clients, it's probably for an older generation model. I'd say it's probably about break even if you're paying hosting fees. But yeah, that sounds bad, but really the older generation machines are kind of like a call option. If you're breaking even now, you can buy them pretty cheaply actually, and like in some cases 10% of the price of the new ones. And when you get generally more profitable in the cycle, which is it would generally be now between now and the end of next year, those machines you could pay yourself back in a couple of months, if they're good months. So um, I'm actually not as bearish on the older machines as everybody else is. I think they're an interesting call option on profitability, and they're super cheap. Um, so I'm not sure if that totally answered your question, but I answered other questions. Sorry. All right. So can you discuss how you acquire hosting clients and how you differentiate? Yeah, just to say, we don't have that many hosting clients right now, but it's always been from referrals and friends and people. Just the fish jump in the boat. You know, um, People find you. They're always looking for hosting space. Um, there's more demand for hosting than there is supply. If we ever wanted to do that, it's always available to us. Um, but like I said, I'd really rather have AI clients because they'll pay. The profit margin is, two, three, four times as much if you can find the right situation. So, um, does most of your revenue come from self mining in 2024? Um, yes, it does. At this point, that's basically almost all that we're doing. There may be other deals that we're working on to be selling, machinery and equipment, but right now, yes, that is almost all of it. And let's see, what else do we have here? Have you discovered or created any patentable and subsequently licensable processes? That's a good question. Have we done that? I wouldn't say that are unique to us, exclusively. Um, I would like to do that. I think that would differentiate us even more. We have a really smart team, um, so really it comes down to the cooling process. So um, it's a good question. That's like a real thought exercise for me. I would like to, you know, maybe come up with one. We're constantly talking about it. So um, different things. So uh, right now, I'd like to say yes, but I don't think that we do have anything that's absolutely uniquely us. Um, but running immersion is fairly unique in the market in terms of a specialty. But but maybe I'll come back with something. Maybe I'll be able to answer that in coming quarters, I guess. Um, all right, so if I believe that's it for the questions. I wanted to, if anybody has any final questions, please pop them in. I'll give it just a second to see if anything else pops up. And if not, then yeah, I guess thanks for taking the time, and everyone listening to the presentation. And I keep an eye on us. Our existing operations, our ability to grow, and yeah, just a stock symbol BMNR. Take a look. Thanks again, everybody, and I hope everyone